All right. So this is an intraday update of the stock market, and we did get the PPI data report this morning, and it was lower than expected, which is always a good thing if you're a bull because the market has been fearing inflation since 2022. So now that that's coming in lower, the market is starting to find some buyers, and we did hit that price target, and this is the triple Qs, and that is the resistance here right around 457 all the way up to about 460. So that is the resistance you're going to want to pay attention to, and we did fill the gap to the upside, but we also did open another gap to the downside, which is right here, right around 454. So if we get up to 460 and get a rejection, we'll be looking for that gap fill. But if we clear through 460, and tomorrow we do have the CPI data, so that is a possibility, it will look like the short-term downtrend is in jeopardy and the bulls are starting to take control. So you don't have to predict if we get the breakout. You can simply wait for price to prove it. So if there was ever a time to just sit back and watch price, it is going to be right here in this resistance zone. And that is why I wanted to do this update intraday so that you were prepared for this. If you do not want to carry a swing trade through CPI, that is completely understandable. And that means you would simply sit in cash until we see if we're going to get rejected from this resistance or blast right through it. So right here is the moment only price can tell us. As I told you before, if you got that Monday morning entry, there is no reason to get shaken out of your long positions. If this bull market just continues to go higher and you had the entry way down here, you are in a zero risk trade with very high reward. So as we're going higher, feel free to lock in some partial profits and you can continue to manage risk very easily here. And right now, a good risk level will be right there, right around 454. If we break 454 and break back down below the daily 5 EMA, then you can start to get risk off. But right now, it looks like the bulls do have everything they need to do to continue to push with the higher lows and the higher highs and this critical resistance test, which will be the ultimate test of whether or not the bulls take back control. So as I've said before, have a plan and follow it. Be prepared for any scenario. From 460, there is a scenario where we get rejected and make another leg lower, or the bull breakout where we just continue to push higher and resume the bull trend. And above 460, we would likely push towards 480. And if we get rejected from 460, we're looking for a push back down towards the 420s. Now, this is where the price does all the talking because you have two very valid scenarios, but they all hinge on one critical level, which is this resistance zone we're currently testing. So have a plan, be prepared for both scenarios, and let the price action do all the talking. And if you are swing trading, do not get shaken out of your positions just for intraday volatility. Focus on where your risk is and where your reward is, and then give time for the trade to work. On the S&P 500, we are currently just now testing that resistance, which is this very critical level at 538, and we do have a gap to fill just a bit higher at 539.43, which is also going to be a test of that negatively sloping 20 daily moving average. And we did gap up today, so we could also fill a gap to the downside just above 535.7. So just like the triple Qs, this is a very critical resistance for SPY, and from here there is a bearish scenario where we get a very sharp reversal off of this level and go down for the next leg lower. And that will require a lot of high volume selling, so that will likely need a catalyst of why the market is selling off. Otherwise, the bulls take back control, they break through this resistance, and they push higher towards 446 to 450. So once more, you have very clear risk level defined at SPY 538. From here, we're looking for the bull breakout above it or the bearish rejection below it. Let the price do all the talking and have a trade plan right now on how you are going to trade it, how you are going to manage risk, and how you are going to adjust if it's the bear or the bull scenario. You need to be prepared for both of them. You can currently have a swing trade open for the bullish direction, but you need a plan on when you are going to lock in profits if we get the bearish rejection and head lower. Don't just become a bag holder as a trader. Your job is to manage risk and move like water. You do not want to get overly sold on any direction the market is moving. Right now, we have very valid bullish scenarios, which is the bull market, and this was a correction completing. And we also have a very valid bear scenario now where we just continue to put in lower highs and lower lows and develop a stronger bear trend. So when you have a market that has very probable scenarios for both directions, that is going to lead to lots of volatility, and that's why I tell you always move like water. So if you want to come trade with me and get access to all of my trade ideas, my intraday updates, and my technical analysis, that's in the Stock Channel Discord server, and you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.